Under what conditions do we get to 1,300?
Well, I mean, we've seen a lot of renewed sort of upside pressure in the last couple of weeks, and partly that's related to a reversal of the view of the kind of Trump reflation trade, where we'd expected to see the US economy motoring along, increased infrastructure spending. Suddenly we see this week concerns about whether those policies will be pushed through this year or not, maybe delayed until next year. And then when we cross the Atlantic and look at what's happening over this side of the water, we see the political concerns in France, in the Netherlands. Obviously, we have our own sort of Brexit negotiations going to kick off in the next couple of months, and those sort of let's say political concerns in Europe and where Europe's heading have added to
right.
let's say concerns, risk concerns, and upside momentum to gold.
You know, David, I was a gold reporter back in 2010. If this situation has presented itself back then, the calls would have been for $3,000, $4,000. Back then, I was contending with $2,000. You basically have positioning is still relatively light on the COMEX. Why is that, based on the list of things you just said?
Well, I mean, we're not still seeing the sort of same momentum into gold. If you look at, say, ETF positioning, it's much lighter than it was a couple of years back. I mean, in the last week, we have seen about 63 tons added to ETF positioning, but it's much lighter. I think still there's a sort of a wider view that the global economy is still motoring along okay. China's doing okay. A lot of the US economic data is okay. There doesn't seem yet to be that sort of confluence of risk issues to drive it dramatically higher. I think we still have to perhaps wait for that confluence. Further out, we are expecting gold prices to find sort of further upside momentum into next year, but that's more of a sort of a longer inflation-related story.
Yeah, and of course, what really matters for gold is what real yields are doing. If you take a look at the Bloomberg here, that white line is the 10-year real yield here in the U.S., and the blue line is the gold price. You can see here that real yields rolling over just a touch, and that, in essence, was really UBS's call. What's your call on real yields when you kind of tie it into the Fed?
We still think real yield's going to be under pressure. So I mean, notionally that again should be supportive for gold. We do think gold's going to go higher. As you see, it's holding on at 12.50 at the moment. We think there will be more upside momentum. Another view is, I mean, our house view on the dollar had been to see extreme dollar strength. I think to a certain extent that is dissipating as well. So we will see gold go higher for sure.